Assalamualaikum everyone, this is Sir Fahad again with a video, and we are uploading a video after a long time, and the reason for this is that I was too busy. First of all, I would like to say Ramzan Mubarak to everyone, those who are watching out. And today we have a new topic of accounting. So we are uploading a video on accounting, but you will notice a little difference, a small difference in the title, that is bad and doubtful debts, but in the brackets it's saying accounting 7707. Obviously those who are appearing in this year, so they will be writing it down accounting 7110, but now Cambridge has made a change, and the change is that the code has been changed, and there are some topics, some small topics that have been excluded from the syllabus. On the top here you can see that we have our blogspot website, that is fahadalicommerce.blogspot.com. Make sure to follow this website and make sure to subscribe this channel if you haven't subscribed. Okay, starting with the topic, what is a debt? First of all, we should understand the basics of the topic so that we can build on more knowledge. If we are not familiar with the basis, then it will be difficult for us to understand the topic. Okay, what is a debt? Debt is an amount of money owed by a credit customers. Obviously, if we are running a business, then there would be some customers who would be purchasing from us, and they would have agreed to us that they will pay us later on. So those who will pay on later on, we would be doing some credit sales to them. Okay, if we are doing some credit sales, there is always a chance that the customer might not pay our business, because there might be some reasons. The customer has become bankrupt, the customers cannot pay, or there are some shifts. For example, if we talk about real world, and recently 2 or 3 days before, there was a supermarket which was in which there was a fire, and that supermarket was completely destroyed by fire. The reason is that there was no reason established that why that fire took place over there, but it was difficult to get this thing that the supermarket would completely end. For example, if I am selling to the supermarket, I cannot assume this thing that the supermarket will close soon, because it was having sufficient profit, and there were number of customers who were purchasing from those supermarkets, and there were a lot of people. So we cannot say that the supermarket would be closed, but some unpleasant incident happened over there and the supermarket closed. So the supermarket had some suppliers. Obviously the supermarket would be purchasing from some suppliers, so for the supplier the supermarket became a bad debt, a debt which has turned to be bad. Okay, what is a bad debt? The second question, I have given some examples. You can visit this blog or website so that you can get to know about the notes. These are my notes. Okay, what is a bad debt? A bad debt is when the amount of money owed by a credit customer becomes unrecoverable. That amount cannot be recovered anymore. As I gave you an example, another example could be that, for example, there were some customers who were purchasing laptops from a business. If we are purchasing laptops or any equipment which is of higher value, then there are more chances that the customer might say that he or she will pay me after some time, after 15 minutes or 1 month. In practical markets, this happens because the customer says I will pay you after 15 days or 1 month, and the supplier agrees to these terms, and this happens. So when he is supplying to that customer, then this would be considered as credit sales. Okay, credit sales, then there are chances that the customers might not be able to pay the supplier to whom they purchase the goods. So the debt can become a bad debt. The customer, if he is not able to pay us, then that becomes a bad debt. Okay, accounting for bad debt. What are the accounting entries? Bad debts debit, the amount of money owed by the customer. For example, there were $200 which were owed by a customer, and he suddenly says that I'm not able to pay you because of some reasons, so the debt has become bad. So we will record down bad debts 200 debit. And trade receivable, that name of the customer. If the name is given in the question, then obviously use the name. If the name is not given, then write down trade receivables, and that will be a credit entry. This is the general journal entry which I am showing you on the screen. Next, we have what is a provision. As we are saying, we have a provision for doubtful debt, but first of all we should understand what is a provision. A provision is an underutilized expense or an expense that has not occurred. but is created by the business to deal with some expenses. They are always non-cash expenses. What does it mean? It means that when you are creating a provision for provision, then the provision is a non-cash expense that is created to deal with some expenses. It means that it is created so that there should not be any situation where the expenses are understated, where the expenses are not recorded according to the expenses which might have happened. The company estimates some percentage, some amount of customers which we have a doubt that they can become doubtful debtors in future. For example, there was a customer who was about to pay me after 15 or 20 days. Okay, then the customer said that I will pay you after 1 month. Then first period was 15 days. Then he came to me after 15 days and he said I will pay you 1 month. Then again 1 month. As the time goes on, I will realize this fact that there are less chances that I will recover the amount from a customer. So that will be a provision for doubtful debt, because I have some doubts on the customer. When it becomes obvious that the customer cannot pay me, then that will become a bad debt. Okay, so provision for bad debt, if we see the definition, it's an estimate of the company that some debtors might not pay them. The estimate is based. Now the second question, that how we would know this percentage is more realistic or this value is more realistic as provision for doubtful debt. So it depends on these things: the past experience of the company. If the company is experiencing that there are 5% of debtors of the whole year which turn out to be bad debts, so the company will use that percentage each year. The credibility of the customers. For example, if there are some customers and I know that those customers always pay longer than normal to pay me, so there are chances that they can become bad debt. So that is credibility of the customer. The credit rating, the timing the customer takes to pay me, the time of the debt. The longer the period, the more the chances. Obviously, if there are if the agreed limit was 15 days and after 15 days someone is saying that I will pay you later on, and there comes a period where I started realizing that it is difficult for me to recover that amounts, and that will become provision for bad debts first, then it will be converted into bad debts. There last is liquidity of the business of customer. Obviously, if the liquidity is not as much as good which is required, so that there are chances that the business will become the bad debt, the customer will become the bad debt. Okay, so if for example there is a question which comes into my mind and which comes to the mind of the of the students, that sir, for example, can there be a situation where the provision for doubtful debts and the bad debts be the same? No, it cannot be the situation. The reason is that the bad debts and the provision for doubtful debts cannot be the same. The reason is that bad debts which have already incurred, bad debts means that there is no chance that my customers will pay me. Okay, now it has become obvious. But as far as provision for bad debt is considered, provision for bad debt is there are chances that my customers may not pay me, and there are chances that my customers may pay me, but I am doubtful about that. So that's why I am recording these things. And the second question is why they are created. Then the answer is down below. They are created to give a true and fair view of the financial statements, so that the financial statements cannot mislead the ones who will base their decisions on the final result. There are some people who will base their decisions on the financial statement, and those people are economic users. I haven't used this term. The reason is that this might have caused some confusion between the students, so that's why I've written down who will base their decisions on the financial statement. So the true value will be reflected, the true profit will be given in the financial statement, the true balance sheet items will be given, so that profits and assets are not overstated. I will tell you this is against the concept that we will see at the end of the notes. How to record provision for doubtful debt, that is the third question. Increase and decrease. There are two situations: either the provision for doubtful debt can increase or it can decrease. If it is increasing, then income statement debit, because you always debit expenses in the income statement, and provision for doubtful debt, it is being credited. Okay. Decrease, provision for doubtful debts debit and income statement credit. Decrease is always considered as an income, because if there is less expense for the company, then the company says it is an income. Okay, bad debts recovered. This has been added into the new syllabus. Earlier, before 2019, it was Before 2020 it was in the AS level syllabus. Now there are some changes, as I said, told you earlier at the start of the video. So we have this bad debts recovered from 2020 in our syllabus. What if you have recorded Mr. A as a bad debt earlier, but after some time he returns to you to pay for the due amount? Would you accept the payment? Of course yes, you will not refuse to accept the amount. Then the key point here is that what should be the accounting entries for recording this. This can be a situation, and this happens practically in the markets, where the business said that this person, this customer will not pay me, and it is obvious according to me. But after some time that customer comes to the business and says that this is your amount. So we will not refuse the customers. Obviously as a business we cannot refuse the customers, because the cash is coming and we will not ask the customer to leave. So what is the accounting entry? What should be the treatment according to the accounting? So first of all we will make his entry again. We will make him alive in the accounting books. When we made him bad debts, we closed his T account. Now we are opening his T account again by debiting the trade receivables. Trade receivables has a debit nature, so we are saying trade receivables debit and bad debts recovered credit. When the payment is received, first we have introduced the debtor again. When we were doing bad debts, we closed the debtor. Now we are introducing the debtor again. Now second thing, when the payment is received, obviously we will be doing cash and bank debit and trade receivables credit. Now if you notice this thing, here trade receivable is being credited and here trade receivable is being debited. So it means at the end the trade receivables is being cancelled out. Okay. Concepts applied to bad debts and doubtful debts. Matching concept is the first concept that applies to it, and it states that the revenues and the expenses should be matched. That is, revenues of 2019 should be matched with the expenses of 2019. And this is the logical thing. If you're recording revenues of 2019, that it should be matched with the expense of 2019. And the last thing is prudence concept. It states that anticipated losses should be recorded as soon as possible, so that profits and assets should not be overstated. As I told you earlier that we will refer to this concept at the end of the video. So this is the concept which was being overruled when we were not recording the provision for doubtful debts. Okay, now moving onwards to the past paper. The past paper which we are using is May-June 2016, and we have question I think it's question, yes, we have question 2. There is a business of Sophia. Sophia provided the following information about her trade receivables. We are not seeing the earlier parts because that's irrelevant for us. On 28th Feb 2016, Wade Designs, which owed Sophia 5100, was declared bankrupt. When someone is declared bankrupt, we will be saying that is a bad debt for the business. Okay, we will open the calculator over here so that we can do the calculation and you all can see it very clearly. Okay, 5100, she owed 5100 and she was declared bankrupt. Okay, continuing with that, a check of 1800 was received. The balance of the debt was irrecoverable. Whenever you see a word written of irrecoverable, cannot be recovered, these all words are saying that the debt has become bad. That is a bad debt. Now we have an aging schedule that is not given in the notes. Aging schedules come very rarely. That is part of the syllabus, like it comes that comes rarely. So that's why we are not including in the notes. But I will solve this question here so that you can have an idea that how we can do it. Okay, first of all, what we will do, we are asked prepare the general journal to record the entries for Wade Designs on 28th Feb 2016. We will debit the bad debts. Obviously, if it is an expense, so we will debit it, but by what amount? She owed 5100 and 1800 was recovered, so it means what amount is irrecoverable is 3300. I hope you saw the calculation on the screen. 3300 is the amount which was not recoverable, so 3300. So we'll write down 3300. I hope you all can see it's visible to everyone. Okay, now on the next line we write down the credit item, that is Sophia. Sophia will become credit. Okay, excuse me for this bad formatting, because it was difficult to write it down here. Okay, we received some amount. The amount we received was 1800 as bank, so we will write it down 1800. So 1800 will be debited, and I have written down bank here, so I will drag it back. Debit, it should be debited, and we will see that it's not moving, so I will write it down here. Okay, bank debit 1800, and now we will credit Sophia. Sophia is the one who is paying us, so if bank is debited, then Sophia would be credited. I have made this entry into two pieces. If you want to make it, you can make it in single one. What you would do, you would list down both the debits, bad debts and the bank on the one side, and both the credits, Sophia 3300, Sophia 1800. Then this would end the entry. Okay, this question is only asking for the journal entry to record the entries for Wade James on 28th Feb only. The next thing happened on 29th Feb, which is a leap year, and it happens after 4 years, you know all. So the question has made a significant difference, so that we should not waste our time in passing a journal entry which is not required in the exam. Okay, we are giving several amounts as debtors. The remaining three receivables are these: age of debt up to 1 month 18,000, and the percentage of doubtful debt is 2%. It is 12,200 5%, 3,300 10%, and over 6 months it is 20%. So what is the question? If we refer to the question, calculate the provision for doubtful debt. Okay, if we do it here, is it possible for us to do it here? Okay, we calculate the 2% of 18,000. What is the 2% of 18,000? 18,000 into 0.02. Okay, that's 360. Okay, this is 360. How we got this? We got this by we got 360. If I confirm this figure, yes, okay, we got 360. Okay, excuse me for this, I will write it down over here. 360, the first value is 360. How you got this? You all can see, and I will repeat it again. 18,000 into 2%, and this next figure is 12,200 into 5%. As you can see, the percentages are given. 12,200 into 5%. 12,200 into 5%, that is 0.05. Okay, that is 610. The next figure is 610, and the third is saying 3,300 into 10%. 3,300 into 10%, the easiest way to do it is minus 10. Okay, 10% means that we exclude 10. 3,300 has 2 zeros, we exclude 10, then that becomes 330. If you calculate it on a calculator, then 3,300 into 10% is 330. Okay, last is 2,200 into 20%. 2,200, the 10% of 2,200 is 220. Then I think it would become 440. 220 into 2, 440. Okay, so 440 is the last one which we got, and the total will be 440 plus 330 plus 610 plus 360. Oh, sorry, 440 plus, I think I need to exclude everything, 440 plus 330 plus and 610 plus 360, and that gives us a total of 1740. So we have got 1740, that is the total provision for doubtful debt at the year end. Okay, now we refer to the last statement, which was saying on March 1st 2015 the provision for doubtful debts account was 2050. So at the start of the year the provision for doubtful debt was 2050. So we have a T account, the last requirement. Provision for doubtful debt is always it is on the credit side. So the balance will be on credit side. I have written now 2016 March 1st and balance BD. Okay, balance BD. So the amount is 2050. I hope this is the amount. If we reconfirm it from the earlier part, 2050. Okay, and we got 1740, you can see here. So we got 1740. So if we observe this thing at the start, the provision was 2050, at the end the provision is 1740. So it means the provision is decreasing, and this would be Feb 28 Feb. Okay, and we will write down balance CD. That is, we have calculated it in the earlier part. The examiner has given us question and we calculated that is 1740. How do I know that provision for doubtful debt is decreasing? Because I have compared the value which we calculated, that is the year end, and the value which we got in the question, that is 2050. Now we will deduct to see the difference. The easiest rule is that see the difference, where the difference would be coming. We are obvious that balance BD would come here, CD would come here, then that is the income statement which will depend on the difference, that where the difference is coming. Okay, I will write down 28th Feb income statement. Okay, let me increase the font size. Income statement. Okay, and the amount is 310. So our provision for doubtful debt is decreasing. That means that less debtors are being debtful in the next year. So this is good for the business. Okay, we will write down the total on the both sides, and there is one mark for this. In 2017 we got a balance BD. There is no mark for CD and there is one mark for balance BD. So I will write it down, March, and that is balance BD. The balance BD and CD always same. So balance BD would be 1740. Okay, these all parts were connected with each other. Okay, how the marks are being allocated? One mark here, and the third one is here. Okay, if we omit this, then we will not be getting one mark. Name one accounting concept which was applied by Sophia. You all know this, that we have two concepts. You can write it down any one, but it is better to write it down prudence concept, because that is in the examiner likes that concepts to be mentioned time and again, so that you get one mark. Okay, prudence concept, as you can see. I hope you like this video, and this was the end of the video. Okay, and what I will say is that do practice more and more questions, and you have the blogspot. Like this video, comment below if you have any questions, any problems, and share this video with those who will be appearing in IGSS or O-level accounting nearly, so that you can have more and more concepts clearer. Password practice is the main key to success. And subscribe to my channel if you haven't subscribed. Because of you, I've got a family above 150. So do subscribe this channel and share, click the share button so that I can be motivated by these factors. Stay blessed, stay inspired, and I love you all.